Josh, friend, so good to have you joining us on the podcast today. And I appreciate the fact that we get to record this on a Zoom meeting. So not only do people get to hear that rich radio voice, but they really start connecting with you, your brand, what you're doing in the industry. And the reason I wanted to have you back on is I'm looking at so much. There's so much volume. Refinance volume is at record levels again. We're seeing so much. And I think in these times where people are so busy, they lose the art of engagement. They lose it. It's just the business is so easy, Josh. Yeah. So I want to talk about those that need to be reminded of what borrower engagement looks like. You have a great product, so let's talk about that right out of the gate. For those that don't know you, tell us a little bit about your background, do a real brief synopsis and about the company that you have.
Yeah, I mean, I've been in the mortgage industry for 21 years. So this is something I've done. I've created several mortgage companies, been part of several different banks, and I've been in the mortgage industry for 21 years, and all I've really done is been in the lending side. So my background really comes from lending and understanding the struggles and managing marketing and sales staff. But we built technology a while ago. It's been very successful in the marketplace now, and we help borrowers or lenders engage with their borrowers, manage leads, and so forth. So that's, that's brief background.
Yeah, I love it. And as a result of you having that, you study that, you find out what works, you build a product that helps that engagement process. And so I encourage people to check it out. What's the website people to go to? We'll get that covered at the beginning. We'll get it covered at the end.
Just Insellerate.com. You could actually see my, INSELLRATE.com.
Yeah. And you can also head out to our website, folks. We also have on the Lykken and Lending website, we listen to our sponsor. We're pleased to have Josh as a sponsor of the podcast, and it's a real honor. So Josh, let's get into borrower engagement. Again, we talked about, as I opened this up, we're talking about how with it being such even the worst loan officers are having record volumes.
That's right.
Let's talk about what are some of the principles that you see are working really well in engaging the consumer. I know if there's some do's and don'ts you can share with our listening audience.
Yeah, no, absolutely. I think you're right. Lenders are as busy as ever right now. And I think now is the time we have to realize, and I've been in this for 21 years, I've been through, several ups and downs. And when it's a feast, it's a feast. Everyone's at the party and everyone's making money. When it's a famine, we forget, oh, wow, wait a minute, maybe this wasn't the right industry choice. You think about, people think about going to other industries all of a sudden. We forget this cycle. But I think what we're seeing now, the lenders that we see that are really growing and expanding in this marketplace, so we have lots of lenders, and some lenders are growing much faster than others, are the ones that are really managing their data. I think part of the process right now is, if you think about your loan offices are out in the street. If I talk to your referral partner and they say, hey, give David Lykken a call. If I don't put it in my app and start that lead, if I don't create that record, that's a piece of paper or that's an email and a name call of David Lykken that I don't ever know if I reach out to. And so the lenders that are gathering all that data, making it easy for them to put the data right in a single place, like a CRM, like a marketing automation platform, then they're able to engage them. And I think this is important because you're busy as heck right now, right?
Yeah.
But in 12 months, 24 months, 36 months, 48 months, you want that referral business. When it's not as busy, when margins, because listen, capacity will catch up, right? Soon enough, there's enough people building mortgage companies, expand. And even if rates stay this low, capacity will catch up. Will still be a great industry, don't get me wrong, but margins will get compressed. So those people that are engaging and putting those things in place now are going to be reaping those benefits in 12, 18 months from now in a much greater way than I think people realize.
I think you really bring up a great point. It's data. And we looked at the recent announcement that happened last Monday about Ellie Mae trading and being acquired by ICE for $11 billion. We were all pretty impressed with the $3.7 billion, but somebody's got to be a little frustrated realizing how much money did we leave on the table to realize they were traded a year later for $11 billion. But here's the key about ICE. They stated something you just touched on. So I highlight this. They said it's about the data. And I think what our industry has done a abysmal job on is creating or capturing the data, whether it happens at lead stage, and then work it all the way through. I mean, again, without turning this into an infomercial, but how are some of the ways you do that with your technology?
Well, I mean, first, it's just entry points, right?
Yeah.
So if you have a web form, if you have a point of sale solution, if you have an LOS, you need a system that can take that information in and provide a borrower journey, not a loan journey, but a borrower journey. call, contact, repeat customer, that type of stuff, but, you know, not a loan journey. So just, you know, our APIs can take data in from all service and platforms, phone systems, LOSs, point of sale solution, you name it, data warehouses. It's very flexible. So we really make sure we get the data. We really want the data in the platform to manage.
So first thing you do is you're capturing the data.
That's right.
Because the slips of paper where everyone writes down the note on a Post-it note, it get, you know,
and
slipped
keep along
away
the way. So some people will capture the data at the beginning, and they'll put it into another system. And then that system is managing what's going on with that customer. And then you don't really know you don't really know the journey, because this system said that, you know, he got to this point, and then this system got from one point to X. You can't tie them together. So it's also about making sure you tie it together. So whether or not you have data flowing through multiple places, you need one place to really understand it, manage it, direct it, you know, control it.
What are some things that first of all, capturing data is one of the most important things. And then once the data is in the system, give us some things that you've learned as a result of developing your system that you'd like to share with our listeners, whether it be using your system or however means they do it. What are some next keys after capturing the data?
So, you know, if those people have interacted with Insellerate in the last year, let's say, on our website as a company, you've probably noticed something called retargeting. If you interact with us, you're going to find us in your Facebook feeds. You're going to find us in Instagram, LinkedIn, Twitter. We'll even pop into your Google AdWords feed. Same thing lenders can do. Very few lenders do this, but it's actually fairly easy. Our system automates most of this, where you can target mass amounts of customers through social media, whether they follow you or not. There's things called custom audiences. This is what we see is really, really powerful. You can start, you know, if these borrowers go to your website, you can get a cookie, you can track them, you can use Google AdWords to push cross-platform messages. That's why you've had the experience. You're on your desktop looking at something, then you go to your mobile phone, it's like, hey, how do they know I was looking for a new grill or whatever it is? It's like, but you know that experience. Lenders can do the same thing. Very few do. And the ones I've seen, I mean, very, very few do this. So it's
that's so amazing to me.
Yeah. Well, it's partly because it's like manna falling from the skies right now. It's just like, you know, every morning it's wake up and there's just food out there because there's it's like, well, I don't have to, but those, again, I want to caution those folks, like, listen, that's great. Be rich for a year, but why don't you be wealthy for, you know, for the rest of your life and build a long-term career and
so good.
Invest in time and make sure that you maximize this, you know, maximize it now.
What would you say to the person who goes like, what do I say to someone? I refinance their loan. All of a sudden, do I start sending them recipes? Or, I mean, that seems just like, I don't cook. It's so fakey for me to start sending out recipes. That's one of the things I heard recently someone talk about. What are some of the things, how do you maintain that engagement and connection with the borrower after the fact? What works and what is just phony?
Yeah, I think, you know, it's funny. We've heard some people say, I love the idea that I can give these people recipes. I think that's really great and powerful. Then I have some people say, no one wants recipes anymore. They want something else of meaningful impact. So it's interesting that, you know, and what I think we're finding is there's not one thing for one group of all people. So different people respond differently, different messaging. Some people find value in that. They may like the fact that you send them recipes on a monthly basis. Send them something about the value of the property of their home, some market condition stuff. They really like that.
That's really powerful,
Then they start paying attention where market rates are at, so they understand, here's where my rates are at. Okay, I'm feeling good. That stuff starts giving them, you know, a really good feeling. And then there's touch points. There's natural touch points. Someone buys a house, they're excited, they move in, they're living in it about 6 to 9 months. They're like, you know what? We said we're going to remodel that kitchen, that bathroom. We have to do that thing that we said we're going to do. I love the house, but that's got to get fixed. And then they start looking for maybe a home equity line of credit or cash out, you know, or
really good.
Right. Or they're going to start, well, maybe we'll put it on a credit card, but you let them know, no, don't put it on your credit card, especially at a time like this when the rates are so low. Borrow it against your house, you know, simple interest, and you know, you can time them right, and you can reach in front of them when they're about to go by.
Yeah, I think you bring up a great point. This is going to date me, but there was a bank many, many years ago that was based in, or at least the data center was based in the Phoenix area, and it was First Interstate Bank, and they were acquired at a big time multiple. And the reason they were acquired is because they did this very thing better than any other bank at the time. What they did is they captured the data. And you start looking at what a Fannie Mae 1003, the amount of data that we have the age of the kids, we have where they're working, we have, I mean, it's a
I don't know any
treasure.
other, I don't know
Yeah.
any other thing or any other industry in the world that collects this much borrower data. To your point, we collect so much about these, how they spend their money, credit card balance. It's unbelievable how much we know about our borrowers.
Yeah, and I think that's when you have a tool like what you're offering, is you begin to have the advantage of what the big guys have. I mean, ICE now just buying it, and they said they bought it for the data. All of a sudden you go like, oh, you're buying this thing for more than just automating the process. I mean, something that there's so many parallels we could get into. Sometimes we perceive the value of something based on what the original purpose of that function was, of that, what it's providing as a service, and not realizing and missing the bigger data. In the case of the First Interstate, they literally kept track of the age of the kids and say, hey, we noticed your kids are getting at the age of going to college. Would you like to refinance? You can borrow out of your equity at this rate, or you can borrow student loans out of this. And people just don't think about using their home equity to finance the college education, and at least have it as an opportunity and create. What are some other things that you're seeing that people can use that to engage the consumer?
So another tactic we've seen, and this is something that it's traditional, direct mail.
Oh,
we
yeah.
are seeing lenders have very high success with doing direct mail, appropriate time, either initial outreach or all those applications you took 30 days ago that did not close into a transaction and didn't move forward. Hey, a direct mail piece, very high response, great conversion. And, to bring it full circle or to highlight the direct mail, Amazon uses direct mail.
Yeah.
I've gotten direct mail from Amazon advertising stuff to me. So it's not like it's still a very viable part of the system. And now think about it. I have to feel that more people are looking at their mail right now because more people are at home. There's less drive time, they have more free time. They may actually open that stuff. So we're seeing people do direct mail, put that in the process, and it'd be extremely effective.
It's so interesting when you look at direct mail, because when you're located in Southern California, the last mortgage company, which I ran the mortgage banking division for, a very successful, one of the largest direct mail companies. And we watched the response rates down. And then I was talking to another direct mail originator, and they go, shh, don't tell anybody, direct mail is back. And he was telling me about the response rates they're having on direct mail. Yeah. We would have envied to have those kind of numbers back when in the late 90s and when we were doing direct mail. So I think a lot of people have moved over to consumer direct on the connected through the social media. Certainly they should have that strategy, but direct mail is back. I think that's a really, really good point. Once someone is in your re-engagement of the of a consumer, what are some of the other things that you're seeing that you'd like to bring out and you're one of the thought leaders in the industry in this topic. I love sitting around with you, and I want to get we're going to go into where the market's going from an innovation standpoint. I want to get your insights on that. But anything more on this topic of borrower engagement that really important that our consumers and our listeners here.
Yeah, I think for the listeners out there, I think that example of First Interstate, what you just said, of how they would use their data to actually customize and fine tune the product or the offering more. I think there's still a lot of lenders. We've done surveys and online. We've for 4 different years, we go online, we apply online, and we see if lenders call us, email us, text us, and how quickly they do or they don't, just to track what technology is out there. I think we've done over 4,000 lenders at this point, about 1,000 lenders a year. And of the people that do respond, which surprisingly over half of lenders never respond to online inquiry, which is mind-boggling. No call, no email. It's unbelievable. Like, this is 4 years we've done this. It's still every year it's over half don't respond. The people that do, almost half of them are using like an automated, no customization type email. It says, hey, David, we're great at purchases, refinances, cash outs, reverse mortgages. You're buying a new home. We're the lender for you. Give us a call. Well, you can't do that anymore.
That's right.
People want like, hey, David, we know you're looking for your first time home. We know we're a lender that can help you. We have lots of first time home buyer programs. Give us a call. It has to be something about what is meaningful to them. If it's just a generic thing, That doesn't work anymore. And we still see lenders that do that all the time. And you have to be specific. Use that data. You have it, right?
Yeah,
Make the
that's
message.
such
I
a
mean,
good point.
marketing and sales is about making the message so people want to buy and understand it and can ingest it, right? And that's what you have to do. Make the message relevant to them, not,
Yeah.
just to everyone else.
It's not here, I'm here to sell you a mortgage and that type of thing. It's it's the engagement, which implies so much more, which is
That's
something
right.
you do. One question that some our consumer are, I keep saying consumers, our listeners, which are definitely consumers of your product. Some of our listeners are thinking, maybe thinking in the back of their mind right now is, when should I start engaging with them? And here's what's behind that question that I have. My daughter, when she was in high school and went through college, just got married, she started Googling or started looking at Pinterest. She started looking at houses. She started looking, because she's waking up and someday she's going to get married, someday and she's imagining, what could my life look like? I like these kind of decorations. So she started engaging in Pinterest and looking at things. And guess what? Some really good engaged people saw that going, she's looking at something. I'm not sure exactly what her age is. They finally figured it out, but but because she's showing interest in this is a future homeowner waiting to happen. There were some people that tracked her all the way through college that are now getting a hold of her. And I'm going, whoever's doing this, whoever's behind that is brilliant. Talk about, when should we start engaging a potential consumer?
As soon as they can possibly see your brand. Like there's no reason to not engage unless you think it's someone who's never going to buy a house, doesn't have a loan, and never will have a loan. The value of the consumer, what people don't fail to realize, again, the data is huge. Those customers are invaluable. If you think about it, Amazon has grown a lot of reasons. I mean, because they make it really easy for you to buy the product. Very seamless transactions, tailored to you. I talk a lot about why Amazon's done a good job. But those companies that really tailor to that individual person and understand that person, they're the ones that grow, and you can engage from the very beginning. Amazon now can sell you anything they want. They bought Whole Foods. You can go shop at Whole Foods. You can do Amazon Prime. You can watch movies because they have you as a consumer, right? They give you a great experience. And why wouldn't you? Let's think about it. From the initial standpoint, if I build value, or if I've done a loan with you, why would I not want to come back to you? I mean, I trust you. There's no reason for me to go somewhere else.
That's right.
So engage. One of the things to that point of the engagement, something that we do, which I think is powerful, social media. So the minute you get someone that pops up in your radar, whether a loan officer talks to a real estate agent, they give them David Lycken's name and they say, here's my referral partner, that person can immediately go into these what's called custom audiences.
Really?
For Facebook, Instagram, Twitter, Google, LinkedIn. And whether or not you and I are friends on Facebook, I can actually drop an ad in front of you. So let's say you get a referral and I get your name and someone gives me information and I'm going to call you tomorrow. I put it in the system. You may pop up on your computer later today or in the morning and go through your feed and see an ad for my mortgage company. And then I call you.
Oh, interesting.
Think about how brand building, or after I call you, leave the message, you see the ad, or 2 days later, you see another ad. I'm building brand because now I'm building and then, hey, if you do something, our system helps you do this of relevant. They're buying a house and they drops in something about buying a home. If it's a first-time home buyer, it's an ad about first-time home buyer or refinance. And now it's relevant to them. You're building brand. You become, very, an expert in their eyes, right? That builds trust and brand, and you can continue to do that. And it's not intrusive. You're not calling them. You're not emailing them. You're not texting them. You're just showing up in their feed and they're thinking, wow, this must be a great company.
So talk about this. I'm going to stick with my youngest daughter, who again just got married. She and her husband called me and says, Dad, we're thinking about buying a home at some point in time. I know it's probably maybe a year or two out, but is there some websites that we can go to start learning about the process? And they said, Dad, please don't send us to one of those websites that are just going to start marketing the heck out of us. I just want information. And talk about the importance of being an information provider versus selling them.
That's right. Well, I think that to your point is, when I ran my mortgage companies, I would say I didn't like the term loan officer.
Yeah.
Because you're not a loan officer. I mean, every loan officer, and when I was a loan officer, I would give everyone a 0% interest rate, 100% finance, and no income verification. We're not stopping you. We're not the officer to keep you from getting a loan. Our job is really a consultant. It's our job to understand and give you the right advice, and then be able to say, hey, it doesn't make sense to do a loan right now. When I was a loan officer, I would go through the process. I was, listen, let me just find out if it even makes sense for you to do refinance, and go, it doesn't make sense for you to do refinance right now. Maybe someone's telling you should, but doing the numbers, what you said, it's not going to pay off. But hey, love for a referral. People say, oh, I appreciate that. And they would give you business because you're not selling them anything. When the underwriter asks for a tax return and says, well, we need that tax return, and you have to call the borrower, and you think the borrower is like upset with you, you're not asking for the tax return. It's the government requirement that every lender is going to ask for the same thing. It's our job in the industry to help the borrowers navigate loan.
So good. Yeah, that's so good. It is so important that we really get that part figured out. Last week on the podcast, we had one of our mutual friends, Alec Kuchinson, on Sales Boomerang. If you haven't listened to that, listeners, go back. And one of the reasons I'm turning 70 here in a few weeks, but I love hanging with you young bucks. I mean, you guys 20 years, so you're a veteran in the industry, so you've earned your stripes. So I just earned a lot more of them. I guess at my age is one way to say it, or I'm too stupid to quit. But I love this industry and I love what it can do. But I love hanging around thought leaders, and you and Alex are thought leaders where they see the market going. I didn't get a chance to talk to Alex about this, but he did, by the way, say hello to you. I think he talked to you after we recorded it, after he did his podcast. But I want to get your thoughts. One sitting at a conference, listening to the two of you talk and the others talk about where things are going. What is your perspective that you and Alex talk about? If we were to sit in on one of your conversations right now, when it talks about where the market's going, the innovation that you're seeing, what gets you guys excited?
I think just by you said it earlier, Ellie Mae got purchased for $11 billion. Ultimate Blue got purchased for $1.8 billion. Blend just raised at a $1.8 billion valuation. I think what we're seeing is there's been a lag in the mortgage industry for outside people to come in, get involved, especially in technology. Yeah. And what we're seeing is, we're talking about innovation in the future, is the market's changing. There's a lot of sleepy lenders who are going to wake up in 3 years, and all of a sudden, when the refinance boom ends, they're not ever going to come back out of it because they've missed this technology jump. There's lenders right now that are spending a ton of money on technology, driving all kinds of new innovation within this one, like AI, artificial intelligence, machine learning. There's some things that we've been working on in that space that people are it's going to change. It's going to completely change the industry when these things come out. So, it's what we talk about is just those lenders who sometimes we talk about those lenders that still don't get it. They're still not monitoring their borrowers. They're still not using a CRM. They're still not automating marketing. They're still not taking control of their data. And we just, shake our heads like, wow, how much money are they leaving on the table, and how much future money are leaving the table? So I think the future is it's consolidation. I think you're going to see players, this retail consumer direct, which we've used the term, that's kind of going away. Yeah. That it's becoming hybrid, because if I'm a retail loan officer and you refer me someone, you're searching on your Zillow app for that house anyways on the weekends. Well, what does Zillow own? A mortgage company. Plus they advertise mortgages. You're now not just my customer. You're looking at everyone's advertising you a mortgage. So I have to be able to work in that world of being able to be mobile and non-mobile, which I don't know if David, we had said, I don't know if you know or not, next Monday is when we're actually going to be showing, or today we're going to be showing our mobile application for the first time.
Awesome. Perfect timing. So let's talk about that. So we're airing this on the day. We're recording this a few days before the podcast, but you're airing when everyone's listening to this today. Talk about that, the mobile app. What's the experience going to be, and how important is this for you from a strategy standpoint?
So it very, very important. I think it's very important for the marketplace from a strategy standpoint as well. So we are releasing the first mobile app that has full lead management, CRM, and all our marketing automation and pipeline management. So what that means is—
Say that again. It's CRM, pipeline management, lead management, and pipeline management.
Yeah, and referral partner management as well. You can manage all referral agents in there. So the difference is there has been platforms. Oh, and the other thing is, which there's a big pickup in the industry, it's text. So now there's there's large marketing companies out there, other companies that their loan officers are on a platform that sends text messages out for the loan officers. But if they get a response and they're in their car or walking the dog, they're not actually able to respond back to the consumer in real time because they don't have a
Right.
text application. And I look at that and it's like, that's a lot of friction. That's not what a consumer wants. That's actually
Yeah.
what drove us to build the mobile app so much faster. Is our lenders who were using the mobile app and using our engagement for text. We're like, hey, we really would like to have this mobilely so our loan officers can respond in the nights and weekends and in between the day. That's what really drove a lot of it. Was
That's
that.
amazing.
But what the big thing is that's different is no one has done yet as well as the inbound call routing, outbound call routing. So if someone applies online, so we have lenders right now working remotely, right? Obviously a lot of people do. Right?
Almost everybody is, yeah.
And we have an inbound call routing platform in our system where you can pull a toll-free number and it can route calls based off of the state licensing automatically through the platform to someone's cell phone, home phone, desk phone. So they're using this technology now to be mobile and be remote. I think it's going to continue. So we built the mobile app so that way I can still get that. If someone applies online, I can get a call to my phone. If someone were to call a direct mail piece, we talked about direct mail, that call could route to me based off the state license into my mobile phone, and I could get the lead on my screen and interact with it. I can even start the application on my phone and get pipeline management. So that we think is going to help this change in the market so the retail loan officers can now interact with their consumers in real time.
I love the telephony that you've built into your app. I mean, it is game changing. It's so exciting. As we wrap this up, give us a little insight to where AI is a fantasy and where it is a practical. You're building, without giving away any secret sauce that you've got under R&D there, but give us your thoughts on what you're excited about where AI can make a difference.
Where can AI make a difference in the mortgage or just in our? Yeah. I'll just say.
Well, in the industry, and then also, I'm kind of
people don't realize.
If you want to share some reason to get excited, I want to share a little bit of insights on this, Josh, because I want them to get excited to get to know you because you're going to be using this.
So AI, just think about the big picture of AI. And I've had a good friend who's been an advisor of us is the United Nations subject matter expert in AI.
Wow.
He's a head of UCI, University of California Irvine Chief Innovation Officer. He teaches there as well. And so I've learned from him a lot about this stuff as early as 3-4 years ago. And what I can say overall, people don't realize AI is going to take over so much. The UN in 2 years ago said if you're in third grade, by the time you graduate high school, like 70-something% of the jobs would be gone that are currently existing. Wow. AI will replace those jobs and automation. It is going to change. So where do I see AI in the mortgage industry? I can give you a handful of places where you can use it. One, it can just be in borrower engagement, understanding better how to engage with your borrowers, communicate to your borrowers, messaging and so forth. Another thing which people don't spend time on is the back office. I mean, why? I always say this, why does the loan officer have to look at a W-2?
Yeah.
Then maybe a junior loan officer, then the setup clerk, then the junior processor, then the processor, then the underwriter, maybe the funder, maybe the doc drawer, maybe the QC department, then maybe the shipper. Then it gets sent, and then someone on the other side does that same 2 or 3 people potentially look at that same W-2 to calculate income the same way over and over again. There's all these repetitive tasks we do in the mortgage industry that just don't. We try to stop them on the sales and marketing and front end, automate all these repetitive tasks, sell. Our back end industry hasn't changed. We process loans the same way. We underwrite loans the same way. It costs more and it takes longer than it ever has, right? So that's what I think I see a change in our industry is on that back end.
It's really exciting. It's so much fun to have you here and have you on the podcast. I encourage people to get to know you, Josh, for a number of reasons. First of all, you got a great product, and it's, as far as I'm concerned, is the best. It's not just because you're an advertiser on the podcast. Your product is so innovative, especially when you work in the telephony, and now with the new mobile app. Oh my gosh, I mean, it just supports where the market's at, and I think it's going to stay. I think we're going to be remote working. Some people were saying working from home, or some people say living at work. It's one and the same these days. But we're definitely at a place where this being decentralized is so critical. And then 24/7, that's the new reality. So I want to just say, so how people tell us about the website. Where can they go to learn more, and how can people get a hold of you, Josh?
Yeah. Just go to Insellerate.com, www.insellerate.com. Ask for a demo. One of our team members will reach out and be more than happy to talk about the product, give a business discussion, tell you what we can do, see if it's the right fit. And if that works, they'll give you a demo of the product as well.
Yeah, I think that's good. And then get to know Josh, folks. I mean, it's fun to hang with guys like Josh and Alex, uh, who our previous again last week was our guest on the podcast. Look at what they're doing. Look at the innovation that they're bringing to the marketplace. It is an indication of where it is going, folks. I'll say this: it's where it's at. It's just the rest of you bet you have a window because of the money you're making to get caught up with what's going on now,
Yeah.
and then get caught up with visionaries like Josh and Alex for where it's going, because they have it dialed in, and I'm so excited about it. I'm just so honored to get to know you. I'm so thrilled to those that introduced us. I love what you do, and of course I love Southern California. I used to live there. I love what you do, so I kind of go back and live vicariously through you a bit. But it's good to have you on. Thank you so much, Josh. Anything you want to say as we wrap it up?
No, David, I really appreciate it. Love being on this program. I'll give you lenders a 5-second tax advice.
Oh, yeah.
Think about this. This could be a banner year for you. Now would probably be the time, fourth quarter, if it slows down over the holidays, spend money on technology or those expenses so you don't do it before
pay tax. Yeah,
that's right. You know, we see lenders do that in the fourth quarter is a good time to actually invest in technology because you can take your profits and get the tax advantage of it, and then use the time of the downtime. But thanks, David. I love being on the show.
Appreciate
it. I can't believe that you're actually that much older than we are. So you don't seem like it. Every time we hang out, I don't
I
get
feel
that
like you're so kind. You let me make an old man like me get to feel like I'm one of you guys. I just absolutely love it. Thanks so much, Josh.
Awesome.
Really appreciate it.
Thanks, David. All right, bye.